This is the ride sharing, plain and simple. I haven't got the affectation of whether or not you're ordering your dinner through it too. Is it the place to be as we go into the first quarter and we stop worrying about Omicron so much?
Yeah, well, clearly it's a reopening play, and the active rider number was a miss, but you are going to see that go up simply because they're going to go back to the pre-pandemic levels. The question is, how much runway is left beyond 2022 and 2023? Because they are going to get back to the pre-pandemic levels. They're not getting market share from Uber. So right now it's a duopoly, but there isn't any share shift, and Uber is the scale player. So I think that's the question that investors will be asking.
What is growth for this company? What does that even mean right now?
Well, so growth would be mid 30% going forward. This was an easy comp year going forward.
But I mean, where do they get that? I mean, do they just expand in the urban areas that they're already in? Do they expand into new markets? Where does that come from? Yeah, so right now it's based on the domestic, getting back their active riders, the level they were at pre-pandemic. They are not expanding into new geographic markets, and that's where I think there will be a question mark around their sustainability of the growth.
It's interesting, Mandeep, there's nothing in the press release outside just sort of the numbers, nothing about the expansion into new markets. We're not hearing anything about a labor shortage, a driver shortage, any regulatory headwinds. Were those not also a focus for you? Will that be on the call?
Well, so clearly they are able to pass some of those cost increases to the customers. And that is what is driving this top line. They're not there yet in terms of the number of rides, but in terms of bookings, they have achieved those pre-pandemic levels. And part of that has to do with the fact that they can increase the prices and pass it on to the customers.
Hey, man.
Now, in my mind, it is hurting their volume growth.
Hey, Mandeep, just real quickly, they start off their press release that they put out, the company, and they talk about the new CFO who came from Amazon Studios. We're talking about Elaine Paul. They put that front and center. What does this CFO need to do, or what does she bring to the company?
Well, honestly, I was surprised. Their previous CFO went for an OpenSea, which is an NFT marketplace. To me, that's always, something telling you about, what he thought about the prospects. And look, they brought somebody from Amazon. It's a marketplace business. But at the end of the day, this company has to find new avenues for growth, whether it's B2B partnerships. That's where Amazon Experience can help. And given they're not expanding geographically, at the end of the day, the sustainability of the growth will depend on either taking market share or expanding, into new markets.
Yeah, Mandeep, I want to go back to pricing power here. How much pricing power does Lyft have, especially in a duopoly where Lyft and Uber, if they are the only games in town, they could actually raise prices pretty significantly, right?
Yeah, so look, I think there has been pricing rationalization. That's how they have been framing it, and they're not, competing in terms of price when it comes to food delivery, what we have seen on the food delivery side. So clearly, I think this is a stable market in terms of pricing, and what we have seen is the volume is coming back, but airport rides, for example, are still way below the pre-pandemic levels. So clearly, there are drivers for the next year and the next 4 or 5 quarters, but we don't know what will happen beyond 2023.